A little more than half an hour to the opening bell on Wall Street. The big event for investors today, this afternoon's Fed decision. Joining us now on the markets and the big slate of earnings we've seen this week is Sarat Sethi, the portfolio manager at DCLA, as well as a CNBC contributor. Sarat, thanks so much for joining us. So we had this disconnect last fall between the markets and the Fed. That seemed to narrow quite a bit when Powell gave the market exactly what it wanted to hear, that we had that end-of-year rally. Do you think he'll give the doves and the bulls more of what they want to hear today, or do you think he might back off some of that?
I think the important part is a message, and the message is going to be, hey, are we going to stay here for a while and the next step's going to be lower, or is it going to be, we think we might have to stay here for longer and raise? If he says the latter, I think the markets will not like that at all. But if he says the former, hey, we're in a glide path, we're looking at the data, and the next step's going to be lower, we just don't know when, I think that's kind of the market's discounting that. But the market's also looking for, hey, when are you going to cut? And I don't think he's going to give us that. I think he's just going to wait for the data to come in.
Yeah, and we certainly heard more of that higher for longer talk from the other Fed officials after the Powell press conference. What do you think what do you guess we're going to hear from him on that this afternoon? Which direction
I think higher for longer. Yeah, I think higher for longer, Frank, just because if he hints that we're going to cut sooner, then the market's going to say, what are we seeing that the Fed is seeing and we're not? And, i.e. we're seeing job cuts, but we haven't really seen them other than tech go far. So I think to hold where we are, strong economy, inflation coming down, and as soon as kind of the Fed sees the economy slowing down, I think that gives them the ammunition to go forward. But you kind of preempt that, then I think you're going to get bonds and stocks selling off.
Yeah, and we're seeing the markets this morning driven a lot by those tech earnings last night. I mean, Microsoft and Google, they were actually pretty good reports, especially from Microsoft. Microsoft stock was up a little bit right after that report last night. Now they're both under pressure. Why are they being punished for what, at least in the case of Microsoft, was a fairly strong earnings report? And are we seeing that more broadly with earnings this quarter?
Yeah, and I think, Frank, if you look at last year was the year of efficiency, right? I think this year is going to be the year of cash flow. And both Microsoft and Alphabet said we're going to spend more money for AI. Now, if you said that 2 years ago, the stocks would have been rewarded immensely because interest rates were zero. Now where interest rates are, investors are saying, wow, these stocks have run quite a bit in the last year. So what should we do? Let's take some money off the table. Same thing happened to Google in the third quarter of 2023. The stock was down 10% after earnings. I do think they've had such a good run, and if investors are looking at cash flow, they're going to take a break because there are other areas of the market that actually are improving cash flow, and you also have other alternatives, just not kind of the Mag 7 at this point.
Yeah, specifically on those other alternatives, what stocks or sectors do you like for the rest of this year?
So, defensively, I think healthcare has great cash flow and growing earnings going into kind of the election year. Commodities, you look at copper companies, you look at the supply-demand imbalance, I think that's also a great opportunity. Consumer staples, the multiples have come down quite a bit, over 20% in the last 18 months. So you're going to get, with input prices coming down and pricing holding up, I think there's a lot of value there. And then utilities. Utilities are still acting as if rates are going up, and I think the opportunity to grow there. So definitely the market's broadened out in terms of valuation. It's just the cash flow of investors hasn't followed, but I think there are opportunities. And then, Frank, lastly, fixed income has opportunities now, too, that we haven't had in several years. You can actually ladder out, whether it's corporate bonds or treasuries, munis, 3 to 5 years, getting good kind of returns that are higher than kind of what inflation's expected to be.